Households receive many benefits from using non-cash methods of payment. They save on time needed to travel to a bank branch or government office. The time saved can be substantial, especially in rural areas. Households that receive government transfers can also reduce the need to pay bribes, since non-cash payments remove middlemen. Since cash is easier to steal and makes people a target of crime, switching to other methods of payment can increase safety. Non-cash methods of payment may especially benefit women because it is easier to hide transfers into bank accounts or digital transfers from others. Women can retain greater control over their money. Also, since these methods make it easier to transfer funds, women can also more easily access money from their migrant spouses. There are also insurance benefits. A study found that M-Pesa users can use the service to insure themselves against health shocks by asking for transfers from their social networks. As a result, M-Pesa users are able to spend more on medical expenses while not cutting back spending on food and education. Finally, payment systems provide an entry point into the formal financial system for many households. For example, they can receive information about other products when visiting bank branches or agents to add or take out cash. Households could also use their history of making regular payments to establish that they are creditworthy, which could enable them to access credit. For example, research in the US found that lenders were able to reduce the share of adults whom they could not score for creditworthiness from 12% to 2% by including their history of making utility payments. In Kenya, a product called M-Shwari uses clients' transaction and payment history with M-Pesa to make short-term loans. Households are not the only ones that benefit from using non-cash methods of payment. Governments can also benefit when they switch to non-cash methods of making transfers by reducing the number of fake recipients and saving on overhead costs.